Hello everyone, welcome to the channel. Today's session was all about gap trading. So, where did market open and what was our analysis yesterday? Let's do a small recap. We have marked the supply and we marked the demand also. Market opened pretty big gap up. Okay, so in the first I'll just switch to 5 minutes time frame. And I'll show you the way market behaved. Okay, so market opened somewhere here and market came down. Okay, so this itself is a pretty big gap, and the supply which we had marked is somewhere around 25,400 level. This is what we had marked from a 15 minutes time frame. We marked this indecision candle as a supply because this broke the structure and we expected market to come up and give a negative reaction from the supply, right? So let's see how market behaved. So market, and one more thing I used to repeat in all the videos is whenever we have a gap opening, the last candle will act as a demand or supply, whatever the scenario is. In case if it is a gap up, last candle will act as a demand, and in case if it is a gap down, last candle will act as a supply. This is a general rule. Okay, so moving on. Yeah, so if you see here, this is the beauty of the market. So if I show you the structure again clearly, market came down, market went up, market came down, market went up again, and market gave a small retracement. This is what we exactly wanted to see. And if you move on further, yeah, so the moment we got this closure itself, there is no inefficiencies, meaning all the candles are retested by a wick. So we can, this is what we call it as a confirmation trade. And in case of confirmation trade, all we have to do is enter a short, keeping the swing point as our SL, so that if the market crosses above this level, our trade gets invalidated, and keep the last open demand or whatever is the next target which we discussed. If market breaks through this demand and goes below, we have the next target also marked down here, right? So allowing the market to play, a market came and hit our target nicely. It was a little bit of drama, but eventually the target was hit. Now, if you wanted to learn further about this gap trading and all the concepts whichever I teach, I will put a link in the description for my course which covers all these topics. So whomsoever is interested, they can take this course and they can contact me to get the course details completely. Now, moving forward, so we saw that the market came all the way to the demand and gave a positive reaction. I'll show you in 15 minutes time frame what does this positive reaction mean. So market came down, tapped here, came down, came up, sorry, and gave a positive closure above this swing point. Now what is expected? We wanted to do a retracement before taking the market higher. That is what we always do whenever we trade in case of reversals. Now before even we plan for reversals, let's quickly look into the higher time frame analysis so that we don't miss any significant points. If you see in 4 hours time frame, there is something interesting. The high of this candle is 25,436.15. The high of this candle is 25,435.75, meaning it is a relative equal high. Relative equal high is always will act as a liquidity. So these points will act as a liquidity in the market. What does liquidity mean? Market will hunt the liquidity, come down and go and hunt the supply before going down in our corresponding direction. This is how liquidity will generally work. Now liquidity is also covered extensively in my course, so don't miss that if you wanted to learn that properly. Okay, so how can we plan our trades going forward? We can remove this because this is tapped and gave a positive closure. Now as part of this, in I just switch to 15 minutes here, we have this open demand which is yet to be retested. If you see, there is a little bit of tiny imbalance left out, which the market did not completely retest. So if market hunts this liquidity and hunts with a wick rejection and comes down and gives a positive closure from this particular demand, then we can expect the market to take higher. Okay, if market does this, we can plan the trade to take it higher. Okay, what if market doesn't do this and market comes down opening flat directly? Then our trade will become even more simpler. We will do the same kind of monitoring if we get a positive reaction in 1 minute time frame before taking the market higher. Okay, if we don't get this positive reaction from here, we will monitor if we get the positive reaction from this particular place. These two are the open demands which we have at the moment. All the other demands are all mitigated in this leg of price action. What if the market opens pretty big gap up? Yeah, it's going to be very simple. We will be monitoring the same like today's trade. We'll be monitoring in case if we get a negative reaction before taking the market lower. Last candle will act as a demand, same like today. So it's better to close the trade here. If market breaks this, we can expect extended targets till here or even till here. Keeping the video short, if you like the analysis, make sure to like the video, subscribe the channel, and comment whatever doubts you have. Thank you so much for watching. We'll meet in the next educational video.